The previous trading week was positive for the US dollar. The greenback extended its rally across the board amid the rise in the US Treasury yields. In the trading session on late Wednesday, we could observe a sell-off in the US dollar after the announcement of the Fed's meeting results. The monetary policy was left unchanged. However, investors were disappointed by the fact that the US Federal Reserve is going to keep the key interest rate near zero until 2023. By the end of the trading week, the US currency managed to win back its losses and finished the session with a 0.31% gain. Thus, the US dollar index approached the important mark of 92 points, supported by the news that the Fed would end the bank leverage exemption on March 31st. Following this statement, the US bond yield surged to a 14-month high at one point. At the same time, the single European currency closed the weekly session near the 3-month low at 1.1900. Investors take into account the rising number of new COVID-19 cases in Europe and the negative impact of restrictive measures and slow vaccination process in the EU economy. As for the monetary policy, ECB head Christine Lagarde said on Thursday that the regulator would need some time to implement the recently approved bond buying program. The European Central Bank has recently agreed to accelerate the pace of money printing. The British pound eased on news that last month the UK government borrowing reached highest level since the record started in 1993. So the pound sterling continues to decline after hitting a 3-year high in late February. As a result, the British currency closed the week lower by 0.5%. Meanwhile, Bitcoin price is not going back to previous record highs. After a correctional decline, the number one cryptocurrency settled just below the level of $58,000 per token by the end of the weekly session. However, experts project Bitcoin to rise to its recent high at $60,000 as soon as this week. On the commodities front, oil had gone through its worst week since October 2020. Crude prices were falling amid dashed hopes for quick fuel demand recovery in Europe as the new coronavirus wave has hit the region. Some EU countries have renewed lockdown measures. Besides, the process of vaccination is slowed down due to possible side effects. The International Energy Agency warned that fuel demand was unlikely to recover to pre-pandemic levels until 2023. All these factors weigh on oil quotes. As a result, Brent dropped by 6.76% at the end of the week. On the one hand, renewed fears of a coronavirus pandemic in Europe supported gold prices. Also, gold quotes rallied after the meeting between the US and Chinese officials, where both sides were rather critical of each other's policies. In addition, expectations of increased inflation pushed the price of the previous metal higher. Gold advanced by 1.27%, marking the second consecutive week of growth. You've watched the combined review of currency and commodity markets on InstaTV with me, Anna Kasatkina. Subscribe to our YouTube channel to keep track of all the latest events on financial markets together with us. See you back soon.